Markets.com. So today is Wednesday, so I hope you're all feeling nice and refreshed after the weekend. We're going to talk markets. We do have a relatively busy week, in my opinion. We do have a few important economic data sets coming out, like the US CPIs on Wednesday. We have the BoC interest rate decision as well, and also like some Japanese data here and there. So for some, it might be a little bit on the boring side. However, for some, it could be quite interesting. So it really depends on what you're trading. So, ladies and gentlemen, stick around. We're going to dive into the markets. We'll look what's happening. You can you can ask questions. Feel free to do so. If you're watching this as a recorded session, hey, you can always drop a comment in the box below after the video is kind of sitting there, yeah, we can go from there. So, ladies and gentlemen, thank you very much. Like I said, stick around. Do not tune out. I'll see you in a bit. All right, okay, ladies and gentlemen, welcome everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So look, it's Monday. It's Monday. I hope you're all feeling nice and refreshed after the weekend. Well, if you don't, well, what can I say? I mean, you know, better luck next weekend, right? Look, we're going to jump into the markets. We're going to pick up on a lot of stuff here, what's happening this week. So in this session, we're trying to have a look and, you know, try to prepare for what's happening, just to kind of digest also what happened last week. But before we jump into any of that, let me quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So look, I'll give you a few seconds to read the rest. Also, just I hope you're all feeling nice and refreshed. I mean, first of all, actually, I hope you're all hearing me okay. Oh, I can see there Christiana in the chat room. Hey, good morning. Hey, happy to see you here. Thank you very much for tuning in. I really appreciate that. So yes, ladies and gentlemen, also before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So ladies and gentlemen, let's, without further ado, let's jump into the market. So the first one I want to pick up here is Japanese Nikkei 225, and look at this. Last week in general, let's have a look at how we ended last week. Last week we ended below this key area of support, which I talked about. This was roughly around that 37,000, kind of 270 zone, 300, something like that. So basically we ended up below that. So we cleared the lower side of the range. We traveled a little bit lower, but look, we're struggling to go further south. Now, in general, I'm still somewhat bearish because we remain below the lower side of my little range here. If we start pushing back up above it, okay, this is where I will consider maybe a bit of a retracement back up. However, I would prefer for the upside to get a little bit more comfortable with some higher levels. I would prefer to wait for a pop above this downside line. This one's taken from the high of the 24th of January, and also a push above all the EMAs here on the daily chart could be great as well. So the 50, the 100, and the 200, which I have here, the green, the blue, and the white lines, respectively, if we can push above those, I think that's also kind of opening the door to some higher levels. Look, what can I say? This in terms of opening the door to some higher levels, I have to admit that first it would be just the upper side of this previous range. But at this point, look, we're below the lower side of the range, this is still kind of looking a little bit more bearish. And in general, last week was not very good for the stock market. Hopefully, maybe this one can be better, but something tells me that there could be some issues on the way. In terms of economic calendar, I just wanted to show you that let's bring in Japan here very quickly. Japan has a few data sets coming out this week. So this morning, we didn't have much, I would say, with just some leading in economic index, preliminary ones, so maybe nothing major here. Now tomorrow, now that's where the more interesting bit comes in, because tomorrow we have the GDP number from Japan, and the final ones, by the way. So look, the annualized one, the GDP annualized number, and at the moment we don't have a forecast. Just for that number, we don't have a forecast, but it's actually quite important. So we'll see how that comes out. The price index year on year, no, the Q on Q, that's the one I'm looking at. So at the moment there is an expectation that we could see a higher number. Okay, if the number comes out, let's say somewhere the same as the forecast, that's fine. In general, even if it drops, let's say, like it fails to meet the forecast by 0.1% or something like that, that is still good, because look, the previous one was at 0.3, so kind of you're still coming out at double, you know. So if it comes out, let's say for example plus 0.6 or something, that's still okay. Yes, does not meet the forecast, okay, but that's fine, but still not bad, right? So that's what I'm saying. So that's why let's not rush into things for sure. I mean, how this could play out here, we could maybe jump back into the range here. But if we, let's say, come out something is similar, closer to, you know, what we had last time, I don't know if that's going to be seen as a positive. I think that given that the current worries at the moment, the geopolitical worries that are shaking the markets, those are kind of kicking in. Those are kind of outweighing what's happening right now. You know, what could potentially happen with the GDP number, unless it comes out closer to 1% or maybe above the Q on Q figure, then maybe that's where, you know, we could see like the data actually driving the index back up here. But at the moment, I think that, yeah, it's geopolitics that are kind of weighing in heavily. Let's have a look at what's happening with Australia, ASX 200. Look, for some reason this one's not updated. You know what? Let's skip this for now. For some reason this is not updated, because I think that yeah, I think Australia 200. Let's have a look. Or maybe let's just actually put ASX 200. Let's see. Yeah, for some reason. Okay, you know what? I'm not gonna jump into this one. Let's forget about this one for now, because I need to figure out why the hell this is like not updated. So I'll just get rid of that one from the list. Let's jump into China. I think that this is something that it is worthwhile mentioning. Why? Because we got the Chinese numbers during the weekend on Sunday. Let me just bring in China here into the field. So mainland China, apply. So we got some numbers. Where is that? Sunday. I think we need to go back into previous week. There we go. That's what I'm talking about. So the inflation rate, the year-on-year number, dropped significantly from plus 0.5 to minus 0.7. Month-on-month figure also plus 0.7, dropping into minus 0.2. PPIs, I mean, okay, PPIs are somewhat okay. That's fine, but the consumer price index, I mean, that's in a way dropping quite substantially. We're not seeing major, let's say, reaction here. I mean, okay, we're seeing a bit of a retracement. That's absolutely fine. This is quite logical, but let's say we're not really seeing a big, a big move to the downside. Now, in general, you would say, but you know, higher inflation, that's you know, not good. That's on the contrary, lower inflation should be better for the stock market, right? In a way, yes. The only problem is that you look at the significance of the drop, for example, right? In this case, it's quite significant. You know, we dropped into negative territory. That's wow. So look, where's that number? There we go. We have been in positive territory for quite a while now, and then you're suddenly, boom, you're dropping heavily into negative territory. That's indicating growth problems. So this is where the issue could arise. So yes, you're looking at it from the, you know, your theories of, you know, textbooks and everything that, you know, oh, lower inflation, great, you know, stock, you know, that means that the People's Bank of China will probably, you know, lower the rates. You know, yeah, in a way, yes, that is in a way true. However, you know, at that point, at that time, you have to acknowledge the fact that, we need some sort of, we need to see slight inflation. That's why everybody wants to, have this beautiful uphill, very slight, very small incline graph here with an incline, with the graph with an incline on the CPIs, in order to kind of see that that there is some sort of progress, there is development happening. But when there's significant drops like these, then that's like something that's kind of forcing us to worry a little bit. Let me just launch a chart here. I want to see. Right. Okay. Just a second. So this is there we go. Okay. So this is what I'm talking about. So the Chinese. This one's not updated as well. What? Come on, Trading View. Honestly, seriously, come on. Plus, yeah. So basically, okay, that's fine. You know what? That's fine. But I just wanted to show you this then. So this line here. Let me just make it a little bit thicker, maybe. Yes. There we go. So, okay, so this is what we're looking at, right? And where's that line? Where's that horizontal line here? So let me change the coloring here a little bit. There we go. And let's put this one as this one. So that's what I'm talking about. So this is where we're dropping. We're dropping to that minus 0.7, and that's roughly, let's say roughly around here. So last time we were here was back in January. We dropped briefly, and then we kind of spiked higher again. So look, the question is now, if this is the first sign, yes, this is the problem. This is going to be the first, first step, because I'm not saying that you should start, sounding the alarm and hitting those alarm bells. No, the thing is that now we need like a few consecutive moments here after this, after this result. If this is going to continue, let's say for another 2 or 3 releases, then there's, like I said, then there's a problem, because again there's like a drop in demand, and this is where other companies will start suffering. Long story short, ladies and gentlemen, for now, what can I say? We can see that, yes, we saw a decline, but this is what's happening, exactly what I'm saying, that we're not sounding the alarm. We are worried, but we're not sounding the alarm yet. So, and if we remain somewhere in this little range here, okay, look, from the technical perspective, I think that this is how it could play out nicely later on, because we would be waiting for a breakout through one of the sides of this little box where we are right now, and if we can get a nice clearance through one of the sides, amazing, wonderful. Let's consider the next short-term directional moment. But at this point, I would say just stay cautious, stay careful here. Do I believe that we might exit the box before the next CPI reading? Yes, because we have a lot of stuff happening right now in the world, tariffs and all that stuff. So yeah, just be a little bit more careful right now. Just keep an eye on this. For now, like I said, I would say just observe this one. But once we start clearing one of the sides of the box, then maybe we can consider, like I said, the next short-term directional move. Let's jump into, let's leave this one, yeah. Let's jump into the US indices, and for this, I do want to pick up on all three. You know what, I think this is what's going to happen from now on. I think I'm going to be looking at all three of them at the same time, because I think that this makes a little bit more sense and a little bit more, it's a little bit more easier to look at, because I kept on talking about this, and I said that in general, they like to move in a similar fashion. Last week, if you remember, I kept on talking about Dow Jones Industrial Average. I said that, look, all other, on the daily chart, all other indices kind of already tested the all other, by all other, I mean the S&P and the Nasdaq. So Dow Jones Industrial Average was the one that was lagging to hit the 200-day EMA, and we came very close to testing that. I think that I'll count this as a success. However, not as clear as these two, but maybe, you know, still we have some time. But in general, if you know, if this is it, okay, we'll take that. We will take that as a success. And now the question is, you know, can we go lower? In general, there is some room here for more downside, but we have this strong area of support, which is the 200-day EMA. But we do have the lower side of the range, because don't forget the Dow Jones Industrial Average is still in a somewhat of a range. So it's basically, this is, you know, this is what we kind of could be targeting, this 41,700 zone. I think that's quite reasonable, and then we'll have to go from there. So the Nasdaq, for example, did already clear the, you know, this lower side of the range, where it was before. But some of you probably are saying, oh, you know, what about, let's say, a double top pattern? Yes, that's, you know, whatever you're feeling comfortable with, the way you want to, you know, interpret it. You be the judge, you be the guest, you know, not the guest, sorry, you be the judge. You know yourselves better, you know how to, you know, what you do. My job is to show you some different maybe styles, different examples, and how we can, you know, how can you, maybe you've missed something, or you know, something out, or maybe, you know what, like, you know all the stuff what I'm saying is just like not going to be one phrase which is going to be like, actually this is good. No, so that's what I'm going for. And like I said, for now, look, the S&P is showing signs of kind of slowing down. It's currently oscillating around the 200-day EMA, so I don't like that. I mean, okay, I like the fact that it tested it, but I don't like the fact now that it's oscillating. So what I need to see here is I need to see a remaining, the body of the daily candle remaining below that 200-day EMA. If we can get that, amazing. I will go further south. In terms of the Nasdaq here, I mean, this one's looking quite bearish. We need to jump back above the 200-day EMA in order to consider some lower levels, further declines. And for this one, for the Dow Jones Industrial Average, well, we're still targeting, you know, the area slightly below the 200-day EMA. But again, look, if you're not comfortable with this scenario right now, in general, what's happening, I totally feel you. I totally understand you, because this is not really convenient for me as well. Because this, you know, if somebody's looking, oh, maybe there's, you know, value and stuff like that. Look, let's get ourselves something of a better reversal or something like that. You know, a better signal for a possible reversal, and then we can, you know, examine some higher levels. At this point, let it play out a little bit. Unless you're still holding a position short, you can still keep that, you know. But I'm not, would I jump in right now with no, because unless you're like keeping it from higher, then it's okay. But if you want to jump in right now, I don't think that it's gonna look that you're chasing the market, and we don't like to chase the market, that's for sure. So look, in terms of economic data. By the way, you can always check out our this trading view page here, Markets.com, where I do throw out these separate video ideas, which I believe you can find those useful. So hey, but enough of that about this. Let's jump into this week in terms of the US. So this week not much. Tomorrow not much, I think, as well. JOLTS are coming out. So job openings, and we are expecting to see a little bit of a higher number. Look, talking about jobs, I mean, last Friday, oh my God, I was so happy with this number, because again, this worked out perfectly. Look, non-farm payrolls came out at 100. I was saying in my Friday webinar, my morning Friday webinar, look, I said, I think that this is going to come out somewhere around the same. The previous number was 143. The forecast was 160. This one came out at 151. Perfect. This is what I was aiming for and I was looking for. My concern was about, you know, this number, the 125. This is the new revised number. So this is something that was, you know, the previous figure got revised, and this is the revision we got. So it's all on the lower side, so not good. So this is where, you know, the stock market did not really feel much love. I mean, we can see that we did recover a little bit here, but initially was not feeling a love at all. Anyway, so okay, we're past that now. New week, new start, and of course, the main focus this week from the US will be on the US CPIs. So, ladies and gentlemen, not this one, this one right here. The headline inflation number, which includes food and energy prices, is expected to drop by 0.1%. And of course, you might say, you might say like, hey, maybe this is what's could be driving the energy and everything, because oil has been on a decline and stuff like that. Yes, in a way, yes, for sure. But the core year figure, year-on-year figure, is also expected to drop. So in a way, we're seeing in general a slowdown, and look, this is all beautiful in a way. It's like all very nice coincidence for the for the Fed, because as we know, the Fed is on track to potentially hike. Some bears would wish, potentially cut rates, and to cut them 3 times by the end of this year. Now, will that happen? I doubt this. I don't know really if this is going to be 3 times or not, but or maybe, again, it's really difficult to say at this point, because again, if the stock market starts collapsing, then or it continues to slide, and then yeah, that's not good. Then that's that's bad in a way. That's really bad. But for now, look, everybody's happy. The Fed is happy. I think that they have their chance to go and cut 3 times. Actually, maybe not the Fed who is happy here. The current administration, the U.S. administration, is happy that that there is some slight weakness that could force the Fed to cut rates, and this way we can make lending cheaper and kind of fuel all those programs which require a lot of money. Although they keep on saying that they're about saving money, because that's why there is a special department created for that. But hey, look, what can I say? For now, long story short, we're keeping an eye on the inflation numbers this week. So of course, those are expected to decline a little bit. In terms of other economic data, that's okay. So for that, the same day, we'll get the EIA crude oil stock change. On Thursday, we're getting the US PPIs. Keep your eyes on that. So first, they're also expected to decline a little bit. And also on Friday, what do we have? Michigan, okay, Michigan consumer expectations, right? The preliminary numbers. So I think the main action will be Wednesday, Thursday. So keep that in mind if you're trading something US related. So if the numbers come out on the lower side, again, if the inflation figure comes out, let's say somewhere as expected, I think that maybe we could see the indices kind of continuing to oscillate around the 200-day EMA. If inflation comes out much lower, then I would say indices could drift initially lower, but then maybe bounce back up again. So because again, the initial reaction could be bad, because again, the stock market, or actually on the contrary, the reaction could be positive, and then because there is no growth and everybody would be worried that there is no growth, and maybe this is where some weakness could kick in. So sorry, apologies. First, we could see the push up again on the much lower number. Inflation number, and then we could see, like I said, a move back down. Let's see if this comes out to be true. Again, I don't have a crystal ball. However, we can try to apply logic and our previous experience. Now let's jump into the US dollar index very quickly, ladies and gentlemen. So there we go, mission accomplished. I'm very happy with this one because my target was reached. And look, 103.26. I talked about this last week. Boom. There we go. Initially, I was aiming, in the beginning of the week, I was aiming for the 104.40 tick, and then I was aiming for the 103.26 tick. So now what's next? Well, next I'm chilling. Honestly, I am chilling here and I am relaxing because again, this is this is a little bit tricky. Do we want to see a little bit of retracement? Sure, we do. I'm not against, let's say, seeing further declines, but to see a little bit of retracement, you know, first before another leg of selling, then yeah, that would be interesting. So, but that's only if we do remain above the 103.26. Look, in general, I would say it this way: as long as we stay below, or sorry, below, look, as long as we stay above the 103.26, there is a chance for a retracement. However, if we start clearing this one, yep, further declines are possible. And in terms of where, well, again, we could start seeing areas somewhere around here. Let me just double check this very quickly. I hope you can see this okay. Just a sec. Let me just do it this way. There we go. 101.84 zone. I think that could be quite interesting. Let's jump into the German index, DAX. Okay. Okay, with this one, we are seeing a nice little retracement, which is fine. Look, I mean, I talked about this last week, and I said to you on Friday, we formed something of a shooting star here. Then on Friday, we formed something like a hammer here, and there we go. It seems like we are, these two kind of are pointing towards, you know, a nice little correction back down. And at the same time, we're falling below the 23,000 and kind of, okay, look, on the cash index here, I have my level around the 23,067. So I would say this way: if we start falling and we remain below the 23,000 zone, I am leaning towards a larger correction back down. Let's have a look at the FTSE 100. Oh, by the way, in terms of economic data from the Eurozone, okay, I'm at Friday here, so we have a few speeches from the ECB representatives, as you can see here. And we do have on Thursday the industrial production number. Wednesday, we have again some speeches here from the US. Again, on Wednesday, we have the Lagarde speaking. And then there's again a lot of speeches happening in general. Eurogroup meeting today starting off. So okay, it's interesting. But look, coming back to the UK here, the situation is that we're still in a box. And if to bring UK into the picture here, where's that calendar? So do we have anything major? Not really, actually, from the UK, unless missing something, but no, it seems like, okay, GDP numbers are coming out on Friday, so we still have time until Friday. Look, if it's not going to move the whole week, I will understand, because the main kind of story is on Friday. We have the GDPs, so keep your eyes on that. But again, we're currently stuck in a box. We're closer to the lower side of the box. But again, I need a clearance of that one. If I can get that clearance, amazing. I will consider some lower levels, because at the same time, we could fall below the 50-day EMA. Let's jump into the Forex world very quickly, ladies and gentlemen. So AUDUSD stuck. I'm not going to say anything else here, because again, my analysis is here is the same, because I talked about this upside scenario only from this 0.6408 zone. That's the highest point, the current highest, or actually the highest point of February. If we can clear that one, I'll go higher. For the downside, a drop below the 0.6186 here is required. While we stay in here, I'm just observing the price action. AUDJPY. Look, I would prefer to see a drop below the 91.85 zone right there. A nice good drop below this would confirm a forthcoming lower low. My next target would be the psychological 90 zone. Pretty straightforward. The upside scenario, again, also pretty straightforward. A break of this downside line, which is drawn from the highest point of July, is required. NZD/USD, similar story. I need to see a clearance of the highest point of February in order to go higher. Pretty much straightforward. US dollar JPY. Now again, this is wonderful. This is working out nicely. I talked about this idea of a Fibonacci extension. It is drawn, this one specifically is drawn from the highest point. Is it the highest point? No, the high of the 12th of February to the low of the 25th of February, and then to the high of the 3rd of March. Again, don't get me wrong, this is very subjective. It's not really objective, it's subjective. So that's why I would prefer, like I said, I mean, at the moment, I'm keeping an eye on it, but you know what? It's really like trying to see something where maybe it's not. So look, these levels are working out better for me, in my opinion, and I think that, yes, I prefer these. Let me just maybe make the lines a little bit smaller. They're like, I think I liked these thick lines last week. This week, for some reason, I'm not loving those. So, okay, let's amend very quickly. So, we're currently resting near this 147.20 zone, and yep, what can I say? For now, it's a good area of support, but if that gets cleared, hey, amazing, more sellers here could join in. US dollar against the Canadian dollar. So, okay, we do have some events in Canada happening. We have some political changes in there. So Mr. Trudeau is going to get replaced by Mark Carney, who was the former Bank of England governor. That's quite interesting. I mean, he's Canadian and everything. So, look, I think he's doing. Okay, sorry. I think it's wrong to say he's doing well. No, he didn't start yet. So I think that he could do well. I mean, he certainly has the appeal. I think that this is what the Prime Minister of Canada kind of what they go there and you have to be appealing. You might not be the smartest person in the universe or something, but you have to be like appealing. You have to be interesting, like to why people should listen to you. So Trudeau had this one, and now Mark Carney has it. So but you get eventually, you get tired. They got tired of Trudeau. Now like everybody's interested in Mark Carney, and he knows how to speak. He knows how to how to speak correctly, and I think that this is where, yeah, I think that this is what I think. It seems like on paper his candidacy is the best, but the only thing is that will it actually, turn well in the on the political arena here? Because again, sometimes when you're good in finances, in general, when you're going into politics, you have to understand that there's no logic in there, only hidden agendas, and this is where only you're not working for the people, you're working for a few. So yeah, unfortunately, that's politics. And look, at the moment, the way the market is reacting to this, well, there is a little bit of weakness in the Canadian dollar. However, again, we'll see how it goes further. For now, I'm looking at Canadian USD CAD here against, and I'm looking at these areas and these levels. I do want to say that I'm gonna just observe the price action. I'm not really gonna do much, because again, for me to start looking at some lower levels on this one, a drop below the 1.43 territory is required. It's bang on where the 50-day EMA is, and for the upside, at least a push above the 1.4466 zone, it would be nice. US dollar against the Swiss franc continues to slide, basically just a copy of the DXY chart. Let's jump into the Euro USD. Okay, so the bears are waiting. The bears are waiting for the Q to step in. However, like I said, like I showed you with the dollar index just right now. Oof, excuse me. Like I showed you with the dollar index right now. I mean, that one is still, is not finding the love. And well, we're waiting for for some sort of an event which could trigger, which could trigger, and we could see a nice move higher. Look, in my opinion, we're waiting for the CPIs this week. So if you're trading Euro USD, keep your eyes on the US CPIs this week. So just be careful with that, and just go from there. At this point, try not to overcomplicate your life. We could see a shift here and there, but I think the main event will be on Wednesday. EUROJPY, just a quick one update. Oh, I like this one. This seems like a nice little bullish flag forming. Okay. But in general, as I said to you before, at least a break above this downside line taken from the high of the 11th of July is required, because at the same time we could jump above all the EMAs here on the daily chart. If if we clear this other flatter downside line taken from the high of the 31st of October, then yeah, I'll get a little bit more excited with the upside. Let's jump into GBPUSD. GBPUSD is at an interesting spot here as well, and we are resting near the 61.8% on the Fibonacci retracement drawn from the highest point of September of last year to the lowest point of January of this year, or in general, the current lowest point of this year. So yes, we're seeing a nice, beautiful correction here of 61.8. Question is, can we go towards that 70.5? I do like this area. In general, I like the psychological 1.30 zone. I like this one. I think that we're not far from there. So hey, why not to reach that one? Let's jump into the commodity world. Gold, look at this. I mean, gold is struggling. Now, look, I talked about this a while ago. So this 2,920 zone seems to be providing fantastic resistance. Look at this. We got some breakouts. We got some clearances, but this is just, yeah, spectacular how this is holding on nicely. Let me just, yeah, make these less thick. For now, I would say that if we do clear that 2,920 zone, then yes, wonderful, more buyers here could join in. Now, if we do drop below the 2,885, then yes, wonderful, certainly more sellers here could join in. Again, of course, on everybody's mind right now is the psychological 3,000 zone. Everybody wants to see gold going there. But let's not rush into things, okay? Because again, when it becomes way too obvious, or way too good to be true, then it's too good to be true. So if you're aiming for the 3,000, then you need at least a pop above the 2,956 territory. That's but let's keep it short and simple. First, let's examine this 2,920 zone. If we can clear that, amazing, boom. I will consider slightly higher levels. Silver is interesting here. It's also kind of showing signs of positivity, but we need some breakouts. So if we can get that breakout here, if we can get that break above this downside line, above this 33.38 zone, then yes, wonderful, more buyers could join in. Let's jump into oil. Yes, so the $67 mark, we're now flirting with that. Well, we've breached it, but we're flirting with that right now. So it seems like do we want to stay above it? Do we don't want to stay above it? Look, let's put it this way. If we stay above the $67 mark, I will consider a little bit of a move to the upside, but not much, because my downside line is the one that I'm going to be watching carefully. Because if we do, or let's say push a little bit higher here, we will struggle with the downside line, and then yes, another decline here could be possible. So long story short, look, if we do stay above the $67 mark, I'm considering a little bit of a retracement back up. Then I'm going to keep an eye on this downside line. If it holds, another decline here could be possible, where we could target that 65.25 zone, which has been a fantastic area of support, because that's also the lowest point of September of 2024, or in general, actually, the lowest point of 2024. Yep, good level. Let's jump into natural gas. Beautiful pop. Look at this. Last week, I talked about this. I said, keep your eyes on the 4.46 territory. Did we get that pop? Boom, we got the pop. And there we go. Look at this. Amazing, amazing, fascinating, beautiful. The question is, what's going to happen next? Well, to be honest, I think there is room for some more upside, as long as we stay above this 4.46 territory. Because look, I mean, these are like levels that we could go further with, yeah, it's let's not rush into things, okay? For now, let's keep an eye on this. I mean, yes, if you're trying to chase this, I would say of course, don't chase this, because again, if you miss this, you always, you rather buy on a drop, on a dip, on a good dip, and then kind of, but this, like I said, if you start jumping in right now, this is like, for me, this is chasing. Coffee. I love it. I love it. Not to mention the product itself, but just the chart here, very technical. Look at this. We found once again resistance near this 411 territory. So In general, if you're looking for some higher levels, yes, a break of this 411 zone is required. If we can get that move, amazing. Yep, more buyers could join in. But for the downside, a drop below the 366 territory is needed, and then we'll go from there. So, long story short, for now, I'm observing this one. If you're bearish, then wait for a drop below the 366 at least, because then a forthcoming lower low will be confirmed, and we would be below the 50-day EMA. Sugar, my beloved sugar. Okay, we're seeing a little bit of retracement. That's fine, but again, it's not really something that I'm worried about the fact that we didn't really test the 1750 zone. I know that we were not supposed to in general, but I mean, is this a higher low now? Or is this just going to be like a little temporary correction before another possible leg of selling? Now that's the question. So that's why I'm not rushing into things yet on sugar. Yep, it could be quite interesting, but let's not rush. Let's have a look at other commodities very quickly. Wheat, by the way, if you're not really trading, I do love to look at these exotic commodities, because again, those sometimes give me like a clear picture of what's happening in the world in general, with the food supply especially, and look, wheat, so far so good. There's plenty of it, and I think that it's we can see it at the in the shops, because the flour is still quite affordable, and it's not like it's in deficit or something like that. So then it's still good. Cotton. Now, cotton is an interesting one. So I like cotton a lot, and I like this commodity, and I think that eventually at some point this should present itself with a very nice opportunity. Why? Because again, look, we love clothes, right? And so also the problem is that we're getting into this world now where more and more different diseases are affecting plants, and these quite vital plants for us, like coffee, chocolate, cocoa, like rubber. These ones are, yes, these ones and those plants get, let's say those trees get cut out. It's a human factor in here, because we are not very bright individuals in general. We keep on destroying our nature. Then there's like other diseases which happen naturally, and like I said, but the demand for clothing, for cotton, will remain in a way, right? And that's why for now the price is still good. I think there is enough supply. However, just we need some sort of like damages in the crops, and then this is where the issue arises, and this is where it could have its negative effect later on, and we could see the price kind of jumping significantly here. Now, let's jump into the for dessert now, because we're going to finish the show in a bit. Let's for dessert jump into the crypto world and look at this Bitcoin testing again the 200-day EMA. Now that's quite interesting, and we're testing that 200-day EMA. The question is now, are we going to go further south? Well, to be honest, I don't want to say anything, but in general, for now, it looks quite bearish. It looks quite bearish, and it looks like we could actually end up traveling lower. Now, in terms of lower, this is what I'm looking at for now. The 73, 74 zone, somewhere there. So this is what I'm going to aim for, and this is what I'm going to target if we do drop and stay below the 200-day EMA on Bitcoin here. I do like this area. Let's see. For the upside, as I said to you before, push above the 90,000 zone at least would be needed. Ethereum is now flirting with that $2,000 mark, and or should I say maybe 2,000? Just it's a ratio. So we're ranging here right now, or should I say we're oscillating around that 2,119, 120 zone, but given the fact that we're currently below this hurdle a little bit, this kind of raises concerns for the bulls, because the next target is could be that psychological 2000 zone, which we kind of already reached today at some point, but then we rebounded. But look, if we once again break that, my next target is the 1,900 zone, and then we'll go from there. Ripple, Ripple is at an interesting spot here as well, because we are breaking the triangle pattern. We're exiting it for the lower side, and we're currently resting near the 100-day EMA. So look, I will say it this way: as long as we stay below this lower side of the triangle, then yes, there's still a good chance for this one to drift further south. A drop below the 100-day EMA could attract more bears into the game here. That's my look on this one. Litecoin dropping below the psychological 100 level, but remaining above the 200-day EMA. So in a way, that's proving to be quite an interesting one. So if we do drop below the 200-day EMA, ooh, that's where it's going to be quite interesting. Jumping into Bitcoin Cash very quickly, actually. So actually, you know what? I need to put it here, and I think because I keep on missing out. So Bitcoin Cash, after this beautiful break of the trend line, we're now retracing back down. Look, I'm going to stick to my theory, and I stick to my logic here that whenever we break a trend line, we tend to revisit it from the other side. And in this case here, we broke the downside line, so it seems like we want to revisit this broken trend line from above. Okay, will that be the case, or actually, will that be the case, or actually this little hurdle is enough, or maybe, not only this one, actually, maybe this one as well, the inside swing high of the 13th of February. So if this area is enough for, for the bulls, maybe, then hey, look, we could see a nice rebound like this. Let's see what's going to happen. My only concern here for the downside is, if we drop somewhere below this 272, then yes, great, more sellers here could join in. But I think that we could already even start looking at some lower levels if we do fall back below this downside line. Very quickly on Dogecoin here. Dogecoin, beautiful test. I talked about this last week, and I said to you, do not rush into things, because again, we're still in the falling channel, and we did not really get like that perfect of a test of the lower side of the falling channel, which we can say now that's where I'm gonna take it as a good result. We fell below that psychological 0.20 mark, and look at where we ended, around 0.17. I mean, this is just spectacular. Like, for all those who were trying to buy Dogecoin and were buying Dogecoin because they were thinking that, hey, the Department of Government Efficiency will kick in, that's why there's this thing there, there's this logic that that this is where Dogecoin could skyrocket, maybe later, but maybe later, but not maybe now. Again, at this point, looking at this one, maybe even this could end up breaking the lower side of the falling channel. Again, if Bitcoin continues to slide, I think that this one could drift lower. In general, like I said, it's very interesting to see the developments here. Do I think that this could go all the way back to the 0.10 zone somewhere? Look, let's not rush into it. First, let's keep an eye on 0.15, and then we'll go from there. And finally, Polkadot here. Polkadot is still in the box, and it's closer to the lower side of the box, but still in a box. So in a way, for some, if you are holding, then okay, great. You're still probably not in panic mode. Once it starts breaking below the 3.75, now that's where concerns could arise. We could start like seeing some lower levels here. Again, but Polkadot seems to be like a little bit more resilient to what's happening in the market. I think it reached kind of its like bottom here, but it's going to look very sad if we're going to start clearing this 3.75, 3.57 levels, and then this will confirm a forthcoming lower low. So, ladies and gentlemen, that's it. Then that's a wrap for Monday's session. Thank you very much. Thank you very much, everybody who was watching. I hope you found this useful. Too bad that you were not asking any questions. I mean, I really preferred those. But hey, you can always think of a question, leave it in the comment below after this video gets kind of finished with the editing, and yeah, we can go from there. So join me on Wednesday in my midweek review. We're gonna pick up on the to see what's happening. We're gonna it's gonna be the CPI day on Wednesday, and the US CPI day on Wednesday. So we'll see how the market is performing before that, and yeah, we'll go from there, and how to prepare ourselves maybe for that, for that release. So ladies and gentlemen, as always, 8 o'clock GMT time, 10 o'clock GMT plus 2 time. Join me on Wednesday, and yes, hopefully you will enjoy that session too. So thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Wednesday. Bye bye.